All right, thanks, Scott. Hello, Andy.
Hello, Steve and
All
Scott.
right.
Hi, everybody.
Hi, everybody. Another Tuesday flying by. Good news is, at least for me, the lawnmower man already came and gone 5, 10 minutes ago. But the bad news is my home office smells like two-stroke motor oil now. Um, but no distractions for the host. So welcome. Thanks for tuning in to Trade of the Week. I'm kind of talking slowly here because people have a tendency to slowly file into these things as we go through the first few slides, but we do have a lot to talk about today, especially in the ways of Holly. We've got some pretty cool stuff to show you. So let's get into the slideshow here. Just the reminder of the fact that we're a software as a service provider. We're a content producer. We are not registered investment advisors. So if you're looking for specific advice tailored to your family and yourself individually, when it comes to your finances, you got to talk to the people that took the fiduciary responsibility questions and answers. They'll help you out, but that's not what we're here for today. So please don't see or don't construe anything that you see or hear as investment advice. We're just going to throw some ideas out. Yes, Frank, the smell of fresh glass clippings and exhaust is kind of what I'm dealing with right here. So if I get a little loopy, Andy's going to know he's going to have to come in and save me. We are a vibrant community of traders. We have a lot going on Monday through Friday, and we repeat it every week around here. Starting with the live trading room, Barry Anderson hosts a room of about 500 people on average. The best thing is it's a free room, and 500 people wouldn't be there if it was not worth its salt. There's a good handful of ideas put forth by some traders in there. They're constantly on the ball of what's going on, and they're, of course, using Trade Ideas technology to hone in on the opportunities each day. And it's pretty much from bell to bell, Monday through Friday, and Barry's hosting the room. As I said, he's showing his desktop with his Trade Ideas platform, and also helping people with technical support and things like that. And so, yeah, we'll take a look at that, Frank. Aside from being a great free room, it's hard to compete with free out there, we have webinars throughout the week. The one you're listening to right now is part of our afternoon marketing webinar series, always starting at 5 p.m. Eastern time. And yesterday I helped out Jamie. Today is Trade of the Week. And tomorrow is going to be Q&A with Dan and Brad. Always fun to listen to what those guys are sitting on in terms of things to be unveiled. And then Thursday, Andy takes over at the trading studio, comes up with some timely content for you guys after the market bell on Thursdays. So those are our afternoon webinar series. And we also have TI University, which is a 4-part live webinar, just like you're experiencing right now using the GoToWebinar experience. We go through some preconceived content, basically Monday and Tuesday, kind of basic, and finish up Wednesday and Thursday with more intermediate advanced stuff. So I'll be helping Andy out tomorrow in that webinar. We'll talk about some back testing. So if you're curious about back testing, stop on by tomorrow. And then since there's no Trade Ideas University on Friday, we typically host a 3-hour Friday support session. 11 to 2 Eastern. However, this week we have our much excited Trade Ideas Summit in San Diego. So Friday's a travel day for a lot of people. We're not going to be able to host that Friday support session this Friday, but we will return the following week to do that as well. Next slide is, of course, just more of the layouts and bullet points of what we go over during the TI University Monday through Thursday. We're just getting too big, and it's no longer an efficient use of anybody's time to do one-on-one sessions. So we have a really good feedback that we're getting from the 4 classes that we put together. And then, of course, we do save time at the end of each session for Q&A for things that you do want to talk about that maybe we didn't hit on. So a lot of good stuff there, guys. That's why we have a very vibrant community. It's a big learning curve because this product's been around for 14 years and there's a tremendous amount of depth to it. Matter of fact, I'm going to show you something crazy at the end of the session here today that Dan came up with a few weeks ago, and I didn't catch it, but I like what he's doing, and I'm going to make an example of how to use our program to kind of bring together what it is you want to see. So we have a great community, and we feel that all the access we provide you guys certainly, hopefully, helps your knowledge of the product and hopefully some market knowledge too. So all that aside, the theme as usual is man and machine combined, human and machine combined. For you pronoun sticklers out there, the great Paul Tudor Jones is an active hedge fund manager, and he had a great quote. It says, "No man is better than a machine. However, no machine is better than a human with a machine." And what he means by that is you can't just throw everything to the markets in terms of letting a machine do it, putting it into a black box, letting a black box get you in and get you out and just call it a day. It's much more complex than that. I've used the description before. I won't take the 5 minutes here, but the oncology departments that use Watson, IBM, artificial intelligence, those researchers are saving hundreds of hours, if not weeks or months, letting Watson look at DNA and then give back a recommendation to the DNA research, to the oncologist researcher about what an appropriate treatment might be. And that's really, in a sense, what Holly's doing for us. It's just doing it in the financial markets, not in the medical markets, medical journal world. So that's why I like to remind people that it does take a good machine, and that's what we have in Trade Ideas and Holly. But there is also, of course, a human element to it as well. All right, who's buying the drinks on Friday night at the hotel? Well, I'll let you in on a little secret, Dolores. Apparently, there's a 5 p.m. happy hour at the hotel, so I have the feeling that's going to be where it's going to be kicking off. So today, looking forward to seeing those of you, by the way, who are going to show up. By the way, today our market our agenda here is the recap. Got a little bit of a bounce going. I'll give you some thoughts on what I think about what today's action means and what it could mean. A ton of stuff to talk about on the AI Holly. And actually, I should probably reposition those. Before I go to the Holly recap today, I'm going to demo the new AI custom position sizing, and then I'll turn it over to Andy for Holly recap. Talk a little bit about the trade of the week and cash and why we selected no trade or cash position this week. And then, as I teased a little earlier, Dan Merkin's Quantalytics market pulse creation thingamajig Frankenstein thing he came up with. But it's kind of neat to just see, there are a bunch of different ways to arrive at what you're looking for using all the trade ideas puzzle pieces. So that's what we're going to talk about. Let's get into it here. So I'm going to start with the S&P as usual. Spiders really got oversold last week, and I was showing yesterday in Jamie's webinar, these orange lines in the 15-minute charts. That second to the bottom line was a real interesting pivot level last couple of days, and that line has been drawn there forever, guys. We've been looking at these orange lines on my market recaps since we've been starting, and I keep these orange lines in there as kind of placeholders or fire breaks, if you will. We had that horrible downdraft last week. We broke through 2 fire breaks in one day on the SPY, some follow through to the downside. And by the way, look at those volume candles. We were talking 3, 4, almost 4.5 times, relative normal volume on the downside. Tremendously tremendous volatility and volume on the downside. And then we lost that 200-day moving average. And I mentioned with yesterday in Jamie's webinar that we were kind of bleeding back down. We were going to need some sort of a miraculous price action to pop us back up. Well, we did get that today. However, I'm going to paint a tale of two cities here. There's the con and the pros. Let's start with what's good. What can we get excited about here? Well, we can get excited about the price action. Definite better price action than yesterday. But a better volume and a nice big green candle closing near highs. Look again though. Look where it closed, right below that other pivot line that we've had in here forever. So these things, they come and go throughout history, throughout time. They might be irrelevant for a while, but when you get back in the neighborhood, they seem to have some influence. So that's good. The price action's good. All right. What else is good? We reclaimed the 200-day moving average. Couldn't say that yesterday. We closed below it, but today, boom, we're back above the 200-day. But we're right smack underneath that pivot point with some declining moving averages coming down to get real scary with it. So let's go to the bad side. What's not so good? What's a little suspect here still? Well, the volume was a little suspect. I mean, we saw what the volume could do on the downside in a fear mode, but the bounce was not quite as vigorous in terms of volume. It's definitely above We had a 1.5 relative. That tells the story, 50% more than normal. But again, on the downside, we were looking at 3 and 4 times downside volume. So, that's a little suspect. The volume could have been bigger. But what's really suspect to me are going to be the headwinds. This is actually, I think, a good day to do the market recap because we're going to hit where the rubber meets the road here tomorrow, I firmly believe. We're going to find out if this is truly still a buy the dip market or if this is going to become a sell the rip market. And I think probably tomorrow or the next day. And the reason I think that is because these moving averages are descending quickly to the scene of the crime here. And in my experience, we have a nice day and a half opportunity for a bounce right into these moving averages tomorrow. This line will actually be lower, I believe, tomorrow as it resets tonight. But I believe it's going to act as a possible backstop. There's going to be some headwinds tomorrow, some resistance, I believe, at this line. We could very well trade through it intraday, but what I'm most interested in is at the end of the day, we're going to see one of two things. We're either going to see a trade through with a nice green candle like today and maybe a close above it. Then I'll chalk that off the concerned side. But what I think is more likely that we're going to see is a trade up through it and then an intraday reversal. So at the end of the day, and this is what I've seen hundreds of times with this type of setup, a reversal tomorrow that gives us a nice wick, a topping tail wick through that moving average and then a close below that declining 10-period moving average. Yeah, this is the 10-period that's coming down to meet it here, Waleed. And so I think that's probably the more likely of the two scenarios. Again, the other scenario would be to close above it like a hot knife through butter, like whatever I'm saying here is crazy, doesn't even matter. That could happen. But what I'm fully expecting is a move through and then a reversal. And then if that's the case, we're going to have to see where we go Wednesday. If we roll back over with red bars and start heading back lower, that's going to be a little scary for the bulls. If we grind it out for a couple days and then push back through it, later in the week, that's a win for the bears. But I fully expect this is where the rubber is going to meet the road. And in the Qs, kind of the same story, although it got ahead of itself. It actually happened today. And as it were, it's closing right below the declining 10-period. So the Qs had it happen today where it wicked through it, a very small, tiny wick. So we'll see what happens over there tomorrow. I think fully the scenario that I set up in the S&P is probably more likely to happen here in the spiders than it is in the Qs. Look at the relative volume was 1.5 as well. Same thing going on, nice bounce in price. But is this the bounce that everybody gets suckered into after a long juggernaut raging bull market where every dip is bought? And then you get a little bit of fear, and then people all of a sudden forget that fear and start buying again. Well, these moving averages are going to have something to say about that. We shall see. Let's look at the IWM. This is the one that led us down, by the way, and broke through its 200-day and actually bounced right off this swing stop low. The swing exit trade ideas is drawing because those, when you look left, those were the areas of support in the past. And so it made perfect sense that we did, in fact, bounce there on Friday last week. Moving average is right above today's price and a major pivot level and the 200-day. So there's triple headwinds coming up here for the IWM. And remember, the IWM, Russell 2000, was the one that kind of let us down to start with. So as the NASDAQ and the S&Ps were fighting with new highs, all-time highs, the IWM was quietly making the escape out the back door of the bar here. So we'll see. My point is if it continues to be a leader, if it really gets weak quickly, we're going to want to keep an eye on that. And then lastly, the Dow, same kind of ideas, but actually cleaner of all three of them. It's above its pivot line that it's been in here forever. It's above its 200-day. Moving averages are still kind of crossing and coming down, so this one has a little bit of room to the upside, but not as volatile and wicked over there in the Dow, that's for sure. Did you want to add something, Andy?
Well, no, just my 2 cents. Like everything you said, I totally agree with. It makes you wonder if we're just not back in the same old what do I call it here? The same old pattern that we've been kind of seeing over, kind of like we saw around January, after January, in mid-January, if you scroll out, there we go. Yeah, I mean, we had some volatility, but then look what happened days after that. We started fighting our way back. Guys, at some point, this is not going to happen, but you got to question yourself. Man, are we still back in that buy the dip mentality? And until it changes, I assume you have to be there. But you know, there's a lot, once again, you got to go back to there's a lot of destruction that has been made. A lot of you know, these charts are broken. They're below the moving averages. Somebody mentioned Netflix after hours, and
Yeah,
I
I was
just
just
see
going to
it
look
was
at that.
trading up, you know, way up. So that's probably going to help boost. You see the cues
Well,
there
well, let's
gapping
see.
higher.
Let's put the post cues. I mean, it's just one stock. I mean, it's a heavily weighted
Hmm.
stock, but it's just one stock. Um,
Right, but it could have an impact on the other ones that have been
it
kind
could
of beaten
help.
up, the Facebooks,
It
yeah, and
it
the
it certainly could
Googles.
help. Again, the Nasdaq is the quickest of all of these to rebound. It tackled its declining 10-period moving average already today, for sure. Oh,
All
excuse me.
right. Yeah, but you know, I think it's going to take some time. Well, maybe it won't. You know, maybe we just shoot back up a week from now. We're looking at all-time highs again. I don't think that's going to happen, but you know, I think you got to keep an eye on what the pivot lines that Steve mentioned, and also the moving averages. And you know, if we could get back into a sloppy range like we spent the summer in. I know we have a big election in the states here in November, so
Yeah, probably going to be a
could
lot
be
of
a wait and see.
chatter about that going forward. I say, Tony, I'm sorry. I see your message there. I'm sorry you're having a hard time getting into this webinar, and it looks like you said the other webinars work out okay. But
We should have fixed that problem. Yeah.
yeah, I thought we fixed it. We'll take a look. I apologize for the trouble you had. All right, and I say call it. Bears are. Frank's getting on board. He says Bears are coming. So Frank
Yep.
thinks we've turned the tide here. We'll see. Again, I think, you know, tomorrow is really going to be a big tell. If we get a big push and a big end of day reversal, that's kind of what I'm expecting. But whatever I expect doesn't really matter. So there it is, guys. We're going to find out if it's still a buy the dip market or not. Yes, Netflix will certainly help tomorrow. The Nasdaq, which is the strongest of the indexes. So we shall see. We shall see. All right. Moving along. I'm gonna get ahead of the Holly for the day because there was some really interesting stuff. I mean, you guys, all you have to do is look at my screen. I think we can kind of see there was a bias, a directional bias of long. We know that, and that there are some shorts, but they didn't do very well, did they? I'm sure Andy will touch on that. But what I want to talk about is there's been a real quantum leap in the releases the last couple of weeks. We now have a new beta release, and Andy will correct me if I'm wrong, that allows you to start getting and taking full advantage of the data and how it's presented to you in the AI. Notice I'm on Holly 2.0 here, and I'm also on Risk On. And the value in this window says $7,084.72. What the heck does that mean? Well, we're starting to marry up the risk parameters and trade management parameters of the Brokerage Plus system to Holly. And we've done the first little slight step in doing so. And for those that download the brand new beta version, which should be on our website, when you go to tools and options, there's a new option field in here. It's called AI trade size. And there's three options. The first one is pretty self-explanatory. If you want to, you know, risk $3,000 or say $5,000 per trade, obviously that's going to be a lot of shares of a $5 stock. There'll be 1,000 shares of a $5 stock, but it's only going to be 100 shares of a $50 stock. So you're going to get a lot of kind of iterations of different position sizing using that value. Or you could come in here and say, I want the Holly main parent window histogram to show me this data of profit and loss in terms of shares per trade. So again, you kind of run into the same problem. You could do, you know, 100 shares of one stock, but that's going to mean nothing in a stock for Mighty Mouse or a little big guy under $5. Now, after we've been talking a lot with Michael Noss last week, our resident auto trading expert, he's really opened up our eyes to a very simple way to calculate and scale and manage risk size in the blink of an eye. And that is what's called risk based on stop loss. So it's just a real simple figure here. This is a dollar amount, and depending upon your own respective trade account size, you could say something like, all right, I know Holly's not going to get stopped out of every trade. I've never, ever seen that. Maybe some stops on a given day, be, you know, 3 or 4 on a couple different buckets, maybe just 1 or 2 stops. But there's always usually a lot of profits in there, Holly, as well. Well, if I just say, I want to have the AI, and again, we're not real trading here. We're just having the AI give us the data in something we could understand. And so if $200 is a real world, real life expectation for you to say, yeah, in my world of trading, I'll go ahead and risk 200 bucks a trade. Okay, well, that's all we need to know. Now the AI, the position sizing trade idea says, okay, what's the smart stop and what is the price of the stock? And it quickly calculates the smart stop based on the price of the stock and how many shares would that equivalent, is that a word? How many shares is that equivalent to, does that equate in the long run? And that's what we're seeing here now. So if I close this window, I've got it set for $200 per share. So every trade that got stopped out would be a loss of $200 based on the share sizing. And here it is in this window. Look, shares 486 on this one, Dollar Tree, 769 shares on that one. So all of these shares are assuming that based on the stop loss that's already calculated for us, that's the position size that we're going to go in with. So with that assumption on risking $200 a trade, look at what Holly 2.0 did today. She only had 15 triggers. All right, I think one of them was a stop out. Okay, 2 stops hit. There's your $200, $400 in stops. But oh my, look at these values here in the risk on. I mean, Andy's going to get the Dollar Tree. That was kind of impressive. But across the board, these risk on values were very impressive today. So now we're starting to see more of a real world customization to you. Maybe you're only interested, let's do this. Maybe you're only interested in risking $50 per trade. Let's change this to 50. Everything changes with it. All right. It's no longer up 7,000 on the day, but it's up 1,700 on risk on. It was up 530 on doing exactly what Holly did. These values over here have quickly changed. The ones that were stopped out, they're now at $50. So you can use that options menu to custom tailor what is in your wheelhouse. Again, everybody's account size is different. And so when you start looking at these in terms of real numbers, whereas all along, all these months we've been looking at, oh, look, Holly made $4.30 today. Well, on one share. But now we can add in our own custom risk size and have the system share scale for us. So this is a pretty cool new feature, and this was a pretty good day to illustrate that. But just a couple of quick takeaways. Again, Michael has shown me the way that when you're auto trading, this is how he does it. He puts just a dollar amount on his trade. It keeps it simple, guys, and that's obviously what we're trying to do, keep things simple around here. So that is a new iteration that we have in the newest feature of Trade Ideas in the beta version. Waleed asks, how would you know what account size you need to give you a specific outcome? Well, you'd maybe reverse engineer it. Let's say you want to not take any more than 20 Holly trades a day. I mean, and you'll be able to limit that at some point. Well, if you stop that of every single one, which probably isn't going to happen, that would be $1,000. So you could probably figure that would be my worst case scenario. But I think the answer to your question is how much of your account do you divvy up and allocate per trade? Well, I understand. I'm thinking 1/20th of your account to have enough gunpowder, so to speak, enough dry powder to participate in trades that would come out. I mean, and I'm just taking that from a simple portfolio manager. A lot of portfolio managers, each trade is a 5% allocation, so they get themselves 20 trades before they're completely maxed out before margin. All right, so some questions coming. I do every week. Okay. Oh, that was on the invite.
It's a good point. What I like about using a stop loss strategy like this is because you keep the stop the same. That's very important. A lot of people will jump into a trade with X amount of shares, and they're just saying, I'm not going to lose over $100, even though there's no calculation of their stop. They're just using a monetary value. Whereas in this scenario, you're using the optimized stop, by Holly, or technical reason, whatever reason that Holly uses, you're able to apply that. So that's very important.
Yeah, we used to say that all the time. You don't get out of a trade because it hit your stop loss. Look at the chart and have a reason to get out. And ideally, you should have sized your trade accordingly when you got in, so
Exactly.
you wouldn't be in this quagmire. So what we're now
Exactly.
saying is all of that decision process is out the window, and the AI is once again making it simple for the trader. It first calculates what's the technical reason to get out, and then it calculates your risk parameters, thus creating the share size. Pretty
Mm-hmm.
cool.
It's very cool.
All right. So you want to take over and talk about some of the stuff
Sure.
that Holly was showing us today?
Absolutely.
Yeah, Tony, real quick, while he's doing that, there's a column in the share trades that it's called shares, and it'll tell you how many shares was calculated. So you will see that calculation. Do you have
All
that?
right.
Yeah. See, Andy's got it right there. It's called shares. That'll tell you. All right.
Mm-hmm. Right there. So no, it's really cool, man. I'm so excited because forever we've been staring over there at this, these numbers 1.77, and obviously you can kind of calculate the value there, but it's much easier, man, just to look down, see how many shares you would have gotten, what's your P&L based on risk off, what's your P&L based on risk on. Really cool stuff, and I'm excited about it. And I think it's going to really help you guys a lot. So let's go over, man, some of the trades today. It was an incredible day. Now let's face it, I'm not gonna, let the market. It was a nice market. Okay, you had a small gap up, and basically just trended up nicely all day. That does make it easier for any strategy. But when you compare these gains, to the S&P, I think you're going to see there's a lot more, alpha to be had here, on a percentage basis. So we'll go over some of these, and we'll go over some losers too. But I do want to point out that there were some incredible trades here today. I want to take a look. Let's just start from the top, and once again, I got risk off and risk on. Love seeing this. You had a couple of stops down here for a couple of $100 a loser, but look at all the green on risk off. So a good day for risk on, but an incredible day for risk. For risk off was a good day. Still over 2,000. If you were playing very conservative and taking your money, but this is what we want you guys to learn. Okay, there's a lot of days when the market is giving it to you. This was one of those days, and I can tell you right now, a day like today, if you can stay, and risk on, it's going to make up for so many days where you just turned and got out real quick and nothing really happened in your P&L. You lost a few $100 here and there. This is the days you have to make it up. So let's take a look at the CLVS. And once again, I love these trades. A no pain trade. Okay, there's your trigger. And this was from Sunrise Mover early in the morning. You can see there, basically 9 minutes after the market opened. I'm on Central Time. And you got the trigger, and then you had a nice march up until target was hit right here. But once again, that's target hit, but look how much more had you stayed in this trade, all day, how much more you would have made on risk on. Let's go down to the next one, ABC. There's so many good ones today, so I'm not going to spend a whole lot of time on it. This one was an interesting one. This is where, risk off was based upon my share size. It was almost $500. But here's where it got out. So if you were going to go risk on, you basically had to stay in it all the way down to a flat and maybe even gone negative a little bit. Hard to do, I know, but this is why a lot of times we say learn to sell half, hold on to the other half so you can participate, in bigger moves that are coming. And if you looked on the daily here, you would have seen it's like, wow, there's no real resistance, until it gets up to this level. So may have been some news there, I don't know, but when I see that kind of stuff, it makes me think, all right, I'm going to try to hold on until we hit some resistance. All right, but another good trade, CNK. Once again, Sunrise Mover, early trade, 13 minutes into the bell, but no pain. There's your trigger, and wow, went all the way up, and this one was timed exit right here. But look at that. There was really no reason to get out. Just because you see timed exit, don't think, unless you're auto trading, and we can't do that now with Holly anyway, don't feel like you have to get out just to get out. I mean, watch the chart. And if there's no technical reason to get out, you can see this kind of just kept, plugging all the way up to here with no pain at all, no bar reversal, just kept going. So learn to ride that wave. Guys, I can go on more and more. I do want to talk about this Dollar Tree. Here's one right here. I'm seeing a lot of trades like there where she's catching the bottom, of these down days, stocks that are kind of sloping down in a downtrend, and yet she's making some good calls here. Here's one that she got out for on a flat for risk off. Now, had you gotten out for that and really no pain, this is why when Holly gets out for a flat, she's designed to for profit save or reduce risk, whatever reason. She did, the trade did not materialize like she thought it would. She gets out for a flat, but there's no reason for, what's the most pain you may have experienced there with $486, maybe 20 or 30 bucks, and then all of a sudden, boom, you caught this move. Now, obviously, this was news driven, and that was kind of, call it some luck if you want to, but I'd rather be lucky than good any day. But nonetheless, Holly called it out, and we had that move. And look at that incredible risk on profit. Let me know, Steve. Just interrupt me if you want me on these questions that are dropping in. If you want me to address them.
Oh, no, a couple of them are just regarding the email.
Okay,
we're good.
All right.
I'm going to show you something before you hand it back over, so I'll wait till you're done, though.
Okay. Another one here, JP. I'm liking. I like these trades like this where you have a stock in a downtrend. It was a hot China stock at one time, and then all of a sudden Holly calls it out. You got some nice relative volume coming in. This was a good trade. Risk off 136, risk on $296 based upon my risk parameters. A couple of sunrise movers that didn't work out. This one right here. Called early, immediately stop out, and went much lower, although it did bounce later on in the day. And HP. There's another one, kind of a sloppy chart here, kind of in no man's land, but nonetheless, sometimes those work. You can see this was a quick stop out. But guys, this is. I noticed there's a lot of people in here that do not have. Trade ideas, first time kicking the tire. This is where, guys, you're gonna see a difference, in your P&L, being able to see trades, ideas like this that would not come to you otherwise, based upon, and it wasn't just, 2.0 was incredible today, but you can see Holly Grail had. Let's just flip her over to Holly Grail real quick. And once again, you can see there's the P&L. Now this one right here got hurt on risk off, on risk on, I should say. So there, the strategy was to take risk off. But here's the thing, guys, and when you're in a trade like this, and if they don't, you saw the ones I was showing you where the stock was trending, lower left to upper right. When you start getting action like this and it start getting bar reversals, I don't blame you if maybe you take half, and then when it breaks down, below your entry, you sell the other half. But remember, we did not design this for you just to go risk on all day or risk off all day. That is going to be tough to do. Today was a great day, and occasionally you get these great days where you could load up the farm on risk on and hold it all to the close and have a great day. But our idea was to get you, more acquainted with not taking profits too quick and trying to let them ride with you, because our system will show you, had you stayed into the trade, what you could have made. But all right, Steve, let me put this on Grow.
Well,
Let's see what.
Yeah, well, I was going to put it on Neo and show you something that happened today. Okay. It doesn't happen very often. Sometimes we'll get like the same signal in two different Holly buckets. Sometimes they'll both be long, or maybe the same strategy in two different buckets, different. But today we had two different strategies hedge the same stock, SAVE, and it looks as if the long strategy won out in the end. But you don't see that too often, and I'm surprised nobody caught that and called that out. Typically when that happens, the odds are what they are. You know, one of them is going to win and one of them probably isn't, unless they're too far apart and, you know, they get out at different times, but they were pretty close to each other in the entry. It's just going to be up to you to decide which one is going to prevail in that particular case. But the reason they both fired was completely legitimate, two completely different strategies, one long, one short, and all the parameters were setting up nicely within the same 5 minute, 7 minute, I think.
Yeah, this one went off first, and it was in at 468, and then this one went off at 490. So you definitely hedged. You had about almost 30 cents there that you were hedged had you taken them both. But yeah, this is a strategy probably because we have been kind of in a bearish tape a lot lately, where selling strength had the market maybe at this point of the day after an hour rolled over. We may have been just reversed right here. This would have been down, and this one could have been a really good trade to the upside. But yeah, you don't see that a whole lot. Hedging.
All right, I'll take it back.
All right.
Take it back, take backs. No quit seas, no start seas. All right. I was gonna go over some of the very few triggers last week on some of the price alerts I gave out, but you know, little humble brag, SDSs really did a good number when we were talking about them last week about possibly having some more meat on the bone if the market did fall. So just don't forget, that's always available there. But that play is over. The green bar in the S&Ps is now a red bar in the SDSs, and everything's going to have to come back and kind of reset again. So before we go to the next topic, I was just going to show, you know, there's a couple things out there to be had. I'm not going to set any price today simply because I'm not going to force it. I don't see them. We need a few more days to let things settle and set back up. But the AMD reversal worked nicely off that support buy last week. ACAD also had some nice alpha to the upside, breaking out with the nice consolidation. And then the last one was ARQL. That was it. This one wasn't part of that batch. So there was only 3 out of the 5 that triggered, you know, but they still worked. It's just the setups are fewer and more far between that do work. So the trade of the week, good segue, of course, was cash. Knowing what we knew going into the weekend, we basically had a chart that looked, I don't know, let's see, what did it look like? I can't get too much out of it. Yeah, looked kind of like that. No, it didn't. Here we go. 1, 2, okay, so it was the giant red bar and the red bar next to it. Take away 2 candles, and that's all we had to work with going into the weekend. So there was really no need to call a symbol, just to call it. One of our great speakers this weekend, Saturday, is going to be Brian Shannon. And Brian Shannon put up a great meme over the weekend that just basically says, you don't have to be in a position. When the odds don't favor a position, cash can be a position. And I included that meme and gave him full credit for it. And he's going to have a lot of other good things to say, of course, this Saturday. So this was a perfect week. We did it a couple times last year, but this was the perfect week to demonstrate when to jump in and say, hey, you don't have to be in something. Cash can be a position too, because it can be a defensive position. And I think, as we said, for those that do have an itch to trade something, you know, GDX was showing some strength, and it still hasn't really given back much. GDX could very well go sideways for a few days here before the moving averages come up and catch it. So that's one strong defensive sector, I should say, that could remain strong in a weak tape going forward. And again, those are the gold miners. So there was no reason to try and force and figure out a reason to trade something to the long side this week. And typically the mandate of the trade of the week is not to go short. There's many reasons for that as well. We have called SDSs in the past as a vehicle to ride short. Unfortunately, this week wasn't one of them right there. But that's the trade of the week segment. All right. Hopefully, with the 3 or 4 days we have this week, and if I can find some time this weekend, maybe we can get a good email back out on Monday for something that might be setting up nicely. Ideally, I should be writing it Friday after the close. All right, lastly, there's one more item we've got here. Okay, we've done all this. Now, Dan, about 3 or 4 weeks ago, had something he put together on his webinar, and somebody came in to support yesterday and they asked for it. I didn't know what it was. So I asked Dan. Dan gave it to me, and I looked at it, and the guy sent it back to me, and he said, "There's no symbols in here." But it was just as I was starting to understand the concept of what Dan was building. Andy, remember when we were traded in a office and we didn't have trade ideas, but we had something called the eyes client?
Mm-hmm. Oh
Remember
yeah.
how
Oh
fast that
yeah.
eyes client used to move?
Oh,
Faster than you could react to it, right? But
yep.
we could kind of get a feel for the ebb and flow of price action just based on the coloring.
Mm-hmm.
The green and the dark greens coming all through at once. Oh shit, market's doing something. Red's coming through, deep reds, light reds, deep reds. Oh shit, market's selling off. So the guy fully didn't understand, and that's okay. I added, and maybe he's in the webinar today. I'm talking about him. I added some of these columns to kind of help him out to see what's happening. And I'm going to take him away, but quickly, this is an interesting concept that Dan came up with. He said, how could I use the existing trade ideas components, like a Lego set, and build a window that doesn't show me too much information, specifically stocks, but gives me kind of just a visual pulse or a heartbeat of the market and the strength of it, just using a bunch of strategies and a bunch of colors. So what he did is he took the multi-strategy window, and then we go into strategies, and you can see it all here. 5-minute high. Okay, so that's a 5-minute high event, and he colored it light green. 10-minute high, a little darker green. 15-minute high, a little darker green. 30-minute high, super bright green, and 60-minute high, dark green. All right, then we got a 5-minute low here, very faint pink, starting to get a little bit more of a hue of red, and getting into dark red as we get to the 60-minute low. So 1, 2, 3, 4, 5, 10 different events, 5 highs and 5 lows on different time frames. So all he did was color them. And essentially in the middle, there's one more interesting step here. Let's just go there because they're all the same. If I go to any one of these configures, the only thing he's filtering for other than the event is relative volume. And they are all relative volume of 2. So what he's saying here in this window is show me all the stocks that are making new 5, 10, 15, 30, and 60-minute highs, but they have to be doing it on twice normal volume. If he didn't have that filter, this thing would probably just be going too fast. It's just too many thousands of stocks in the market without a volume filter to try and just see which ones are making new 5-minute highs and lows, etc. So I built these columns, to help the guy that wrote in orient himself as to what he's seeing, but in reality, it's not designed for that. So we're going to go to properties, columns. Oops, I have to get out of history mode first. I was showing you history because there's just so much that comes through here so quickly. Let me go to history and go to real time. So I can now take out the columns that we don't want to see. So all he really had was quality. Turn that out, that out, that out. And that left us with just a color wheel. And believe me, during the day, this thing was spinning, guys. So, if we go back to history and, just you'll start to see areas, of solid green and solid red, and that kind of is really mirroring what's happening in the bigger picture. I think a lot of this is after hours stuff. So yeah, as we got into the close, there was a lot of heavy green, solid stuff going into the close. But it was kind of interesting, and I just wanted to share it because it was a very creative, out-of-the-box way to take our existing Lego box, if you will, and put them all together and still show us what we want to see without too much superfluous information, just color coding. And it's an interesting kind of, there's some red. So for those that are interested in something like that, it can be done. I just wanted to share the concept of sometimes you can really think outside the box using trade ideas to get what it is you do ultimately want to see. So that's actually all I've got. We've got a few minutes. We could do some chart requests. If you want to spend the next 5 minutes, guys, looking at some charts, a lot of them, again, like I said, are going to be broken, but maybe there's something that we haven't seen. We can take a look at together, Andy and I, and see what another set of eyes looks at.
Angie.
Before I get to that, yeah, what what did the days mean? Dolores was quick. She saw the numbers on those colors. Those meant days. And the 5-day high, 6-day high, things like
Mm-hmm.
that. Um, and then Kathy, a whole green number means all got win. The dark green numbers on that alert I was showing you was that particular stock was hitting a high, depending upon a 5-minute, 10, 15, or 60 or 30. 60 minutes had the highest color concentration. But it wasn't really meant for a specific stock. It was just kind of meant what is the current pulse of the market as it breathes in and out. Is it a current weak breath or is it a current strong breath? All right, so Dolores wants to look at ANGI. Home Advisor was once a trade of the week, and then faltered us back here. Not bad. It's definitely given back some of what it had, and again, the short float is still very high on this one. So it's not that bad really. 4 or 5 days, a good sell-off, and then it kind of dug a base in there. It looks like the rest of the market, to be quite honest with you, right here. It's kind of what the rest of the market's doing. It's going to bounce right into these headwinds that I've been talking about. Completely different story. I'm going to go back to the spiders. When we were talking about, these days back here, we had no upside, guys. There was no look left and see where the resistance is. We're in a different market now. Now we can look left and see tons of reasons for resistance and pivots and moving averages. Oh my. So, not a real definitive look on that one. Sorry, Dolores. That's just kind of the market we're in. It looks like a lot of other things right now. And then Cree is another request. Okay, I'll get to that one in a second, Frank. So this one looks like it's doing kind of a trend reversal.
Huge volume today.
Big volume today. Must have news, I would imagine. And Cree earnings are today. So
Probably on this morning.
No, it says 0.75 though. It better not,
wow.
because that's really going to throw me off. And there it is. There's your earnings reaction after market. So it looks like those were probably shorts covering going into the earnings. They didn't want to stick around and overstay their profit, their enormous profits that they had. Whenever a stock has earnings, you're going to just want to wait for the next day to see how tomorrow closes, because tomorrow is a full session for people to press change and rearrange anything having to do with their positions in Cree today. All right, so Frank actually put a scan in here last week and Friday. Andy, you built this, and it worked. It's been doing well. If you want to see it,
let's take a look. I will anyway.
I'm doing it too, since I've got the screen to share. Looks like I'm on my other screen. Okay, so we built this one last Friday. New highs and a new 15-minute high with a lot of filters. And what is it looking for again? Frank, and hope you like it. Hope you can improve on it.
Oh, it looks like he already optimized it.
So we can go to history.
Did you change the name of it, Frank, or did I call that the same
Support and resistance. CN came through a lot. WMGI came through a lot.
Oh wait, yes, no changed. So you did change it or didn't? Yes or no?
He put in some support and resistance filters. Yes.
Well, no, I was talking about the name of it. Okay, he changed the name. Okay, I'll have to go see what I have to go figure out what it was I called. What was it? I called it when I shared it. Do you remember?
I don't.
No, I was asking Frank. If not, I can dig around. I'll find it.
What I like to do on these histories is go back and see the early morning stuff. Where were the arrows in the early morning? That's not bad. What about I? Hey, that's a pretty good one right there, huh?
Mm-hmm.
Pages, not bad. So a lot of the stuff that came through early in the morning was having decent middle day. Oops, this one's a little squirrely, but yeah, cool.
It probably went off earlier.
Go back to real time. I'll save that.
Thanks, Frank. I will take a look at it. Maybe we'll revisit on this Thursday.
It was that we were trying to find pivots. We were trying to find areas of good pivots, I think, last Friday. Can you share again? Oh yeah, I can shoot. I can share it. Unless Frank says he's going to start charging $50 for it. Frank's pivot. And there it is.
Waleed says, thanks, Frank.
Huh. Put it in the trade room for all. Of course, we
A lot
all
of
love
people
to
thank you,
share around
Frank.
here. Yeah, so this is really the beauty of this ecosystem as well. Trade ideas, like I was just showing you with Dan. Dan had a crazy thought, which he often has, went outside the box and built something pretty cool. Frank had a thought. He wanted to figure out, how do I get this? And before you know it, the crowdsource can come together with some really interesting ideas. It's a very powerful community that we have, for sure. All right, I think that's it. So we ran out of content, we ran out of some stuff. Let's end on a good note. Thanks,
Yep.
Waleed and Frank, for the
Thank you, everybody.
sharing. Mike C, thanks you for the sharing. So come on in, Scott, and show us where we go from here.
Oh, thanks, Steve. Oh, yeah, we have some items on the way out to go ahead and announce. So the test drive's coming up. Everyone can experience Trade Ideas Premium for 5 full trading days, opening October 29th. It's the Halloween test drive, so sign up for that at trade-ideas.com/test drive. And if you're a Brokerage Plus, if you are a interactive brokerage user, you'll be able to sample Brokerage Plus and engage in some real-time account management with auto trading. Those of you that don't have interactive brokerage as your broker, you can still check out the module, but we don't currently connect other brokers with that module yet, but you can still check it out. But it's a special treat for the IB clients there with the Brokerage Plus aspect, but everyone should try out the professional version of Trade Ideas for 5 days, see all the new hollies, try it out. We also have a live stream coming up of our summit, which is sold out. So there's no more tickets available to come to San Diego and see this in person, but we're making a stream available to anyone that signs up and can watch on Saturday. It's going to be on YouTube. It's going to be live on our YouTube channel. And then once you register, you're also going to receive early access to the recording archive as soon as it's available, and an immediate notification as soon as all the video packages go live after the webinar. After the full day of events. We have a podcast. There should be a new one out this Friday, special for you. I believe we have one where Sean is interviewing someone from the Speed Trader firm, and it's a good one. We're going to broadcast that out on our channel. Just search for Trade Ideas Podcast in your favorite podcast app. Add us as a subscription, and there you go. Everyone should have a copy of the ebook, 5 Ways to Win in a Post-BTFD Market, trade-ideas.com/ebook. Just plug your email address in there to get the download link. And it's great for what's currently going on in the market. Both Andy and Steve contributed chapters, so you should go ahead and get a copy of that. There's a code this month. The discount fall savings is good through the end of the month. Use that if you decide you want to start a subscription and save, or if you want to upgrade your subscription to premium. Just enter fall savings, all caps in, when you're doing a checkout or an upgrade. So any questions at all, email info@trade-ideas.com. And you can follow Steve on Twitter at TodayTrader. There's also at Trade Ideas, and we got some other handles you can find too. Facebook.com/TradeIdeasPro is the page to go to Facebook and like, so you can share what we post. Got some nice blog posts we sometimes promote through there that you can share with your friends and let them know what a good deal Trade Ideas is. Again, info@trade-ideas.com is the best place to send your help tickets. Thank you, Steve. Thank you, Andy. We're going to have a recording of this up later on tonight or tomorrow, and we will send you an email notification about how to find it. Thanks, guys.
All right, see you next time. See some of you this
Thanks,
weekend.
everybody.
Thank you.
See you Thursday.